Yeah, I mean, that's a great question, and I think it's something that needs to be analyzed because...
No, tell me what I should do.
All right.
Where should I list this property?
I think you should go lower, to be honest. I mean, my personal experience with the condo market, try to get a little lower because...
How's it going, everyone? Welcome back to another episode of the Shawn and Matt Show. My name is Matt. That is Shawn, and welcome to our show, Shawn. In today's episode, we're going to be talking about existing home sales dipping for the third month straight. We're going to be talking about Atlanta company that is investing, that is spending $1 billion with a B, $1 billion on Arlington apartments. And we're going to be looking at Tom Brady's real estate portfolio. I shouldn't say Tom Brady's real estate portfolio. I should say Tom and Gisele's epic real estate portfolio. It's crazy that he decided to retire, and then like 40 days later, he's like, "No, I'm coming back."
Yeah.
At some point, he's gonna tail off. But I've bet against him my whole life, and I've lost my whole life. So now I'm like, Tom Brady's the best ever, and anything he does is going to turn to gold, including some of these real estate transactions that we're going to go through. But before we do that, let's start with an article from Inman.com entitled "Existing Home Sales Dip for Third Straight Month." Existing home sales, Shawn, decreased by 2.4% from March and 5.9% from the year before, as declining affordability continued to put off home buyers, according to the National Association of Realtors. And they quote NAR's chief economist Lawrence Yun in a statement. He's usually quoted in these types of articles and he says, higher home prices and sharply higher mortgage rates have reduced buyer activity. And it's so easy to just say, like, yeah, interest rates are going up and prices are going up, so less homes are going to sell. Is it really just that simple, or is this something bigger involving inflation, involving the stock market, involving world, global issues, involving something more than just an increase in the interest rates? Because a decline of like almost 6% year over year is significant, and even about 2.5% over last month is also significant. So what are your thoughts on a third month of existing home sales dip?
Well, I mean, that can be deceiving, right? So does that mean that we're just as many listed and they didn't sell, or so that can be kind of, you got to look at that title and say, all right, well, was it a dip because they weren't selling as much, or was it a dip because not as many were listed?
Total existing home sales decreased to a seasonally adjusted annual rate of 5.61 million, down from 5.96 million the year before.
1696. So that's existing home sales that have actually occurred.
Correct.
So I mean, and that you kind of have to see, all right, how many were left on the market, or what's the percentage of places that are selling. So it could be deceiving, but I think for the most part, this is all correlated, right? I mean, we've been saying, these interest rates popped so quickly that we were caught off guard as real estate agents. And so a lot of homeowners were as well. And they're like, man, our payment went up so much, I can't afford to go where I wanted to go before. But then you look at the stock market. The stock market dropped over 1,000 points yesterday alone. That was 4%. It dropped. Now imagine losing 4% of your portfolio. Think about how much that is. This is killing buying power over and over again. Then you're talking inflation. Inflation is at a 40-year high at 8.5%. I mean, how can you keep going? It can't. It's got to stop. And so I think all of these things are all coming together, and they're helping to push it down. Now, locally, I mean, they're talking nationally, right? And so I always say, like, listen, watch where you're buying, because these smaller towns that aren't used to this stuff, they're going to peak and they're going to fall quickly. And those are the ones that you've got to be careful about. Our local area is still humming. I mean, we can definitely feel the impacts of it. Whether we're not getting as many contracts, things are still selling. Example, in the last 2 weeks, we've had multiple contract situations on condos, which is kind of rare. But it also depends on what you're selling. And some of those went way, way above asking price. So that was last week. Now this week is a different week. And so we have 4 properties coming on this week. We're going to see how the action is on those. But yeah, you can't blame it on one thing. I don't think it's just interest rates. There's so many different factors. There's just turmoil in the world and loss of confidence in the economy. And I think that's going to drive a lot of sales down.
As for your stock market comment about it going down 1,000 points, I read on Twitter a Jim Cramer tweet. He said, "I will say this has got to be one of the worst days I can recall in years, and I've been around the block." And I didn't know what he was referring to because I don't check. I don't have my stock trading app on my phone, just because if I did, I would look at it like nonstop. I don't check the market on a day-to-day basis, but certainly if Jim Cramer is saying that this is one of the worst days he can recall in years, that's something significant. And, in regards to home sales, the one thing that we're leaving out is inventory, and it says that total inventory was up 10.8% from March 2022. So there's a lot of factors at play like we've talked about, but my whole thing is like when the dust settles, like where's the market gonna wind up? Where are sales gonna wind up? How can we properly how can we set the expectations of your house is worth X, Y, and Z when we look back on the 2021, 2020 market and 2022 market? Like a year from now, if a perfect comparable comes, sells today, and then a year from now, we're like, okay, how can we compare the 2023 market to the 2022 market? Where does that comparison shake out? That's the conversation I'm interested in having.
Yeah, no, you think about the inflation number alone, right? If our money is worth less right now than it ever has been, and we're inflated by 8.5% just in the dollar value, right? In a year, if that inflation numbers come back down and we were buying at 8.5% higher than normal, then you've got to think that there's that correlation, right? So we're going to have to use that as a number if the market declines like some people are predicting. But hopefully it doesn't. But there's a lot of factors that are pushing it down.
So I'll give you one example. I have a 1-bedroom condo in Roslyn. It's very easy to comp out. The exact same layout sold in August 2021 for $440. Okay, and now we're $420. And now we're thinking about going on the market at $420 as well. However, interest rates in August of 2021 were like 2.75.
Yeah.
And now they're almost double that. And so as a buyer, if you look at these two properties, it's not the same buyer that's buying these two properties. That's just like a very different monthly payment that you'd be looking. It's hundreds and hundreds of dollars difference. So even if our property is quote unquote like better, more upgraded, better laminate floors, better appliances, better this, that, and the other, can we price it at the same price, or do we have to price it lower to make it seem like it's still going to be the same price for the buyer?
Yeah, I mean, that's a great question, and I think it's something that needs to be analyzed. Because
tell me what I should do. All right. Where should I list this property?
I think you should go lower, to be honest. I mean, my personal experience with the condo market, try to get a little lower, because we're seeing a lot more pop on.
But you just said you had multiple offers on your condos.
Those multiple offers were due to very unique condos. They both had huge terraces, right? So anytime you get anything unique like that hasn't been on the market for a long time, we see six figure increases in these, which is crazy. But I mean, that's what's happening, right? So, but as far as like a normal 1-bedroom in this area, we haven't seen that happen in a long time. And so, I guess earlier, maybe 2 months ago, we were seeing some multiple contracts in the condo market. Now, I mean, I guess I don't know, right? I'm in the same boat because I have 3 coming on in the same building, 2 of them 1-bedrooms, 1 is a 2-bedroom. You've got that one coming on in Roslyn. the pricing is hard. It's definitely hard. And when you have a lot of competition as well, it's like, all right, are we all going to just sit on the market at the same price, or what are we going to do? Somebody's got to be aggressive. And so one of the listings that I'm competing against has already dropped twice. Granted, they were overpriced to begin with, but now they're starting to get into where it should be. And so,
yeah, I think it's clear that the market is slowing down, right? I think it's that's painstakingly clear. Where it can get kind of dangerous is once you start to lump in like a national average, right? Like, how is the Western market doing? How is the Midwest? How is the Southeast? How is the Northeast? It's like, all right, well, you lump it all together and you come up with a figure, but you really got to take a deep dive into those individual markets, those metro areas, to really understand what's happening in each of those unique areas.
Yeah, good point. I mean, that's exactly it, because they're going on a national average from the Association of Realtors. That's up, right? I mean, you look at all these submarkets, some of them are going to be getting slammed, especially in those smaller cities. And then you go to what was it, like somewhere in Boise, Idaho or something, right? The California market's just pushing that thing crazy. And that could keep going because it's California moving out. It's the exodus, right? So there's always going to be those pockets that are going to be hot, and there's always going to be the ones that are going to be pretty cold.
All right, let's move on to our next topic. This comes to us from WTOP News. Atlanta company spends $1 billion on Arlington apartments. Atlanta-based multifamily real estate and development company Cortland is acquiring 4 residential properties in Virginia's Arlington County for a total of $1 billion, Shawn. And as if to say there was any hesitation about apartments in a post-pandemic world in a city-like environment, this goes to prove that otherwise, because this company owns many apartment buildings. They've invested in more than 250 apartment communities, and they have offices in Charlotte, Dallas, Denver, Houston, Orlando, and Tampa. One of the buildings they just acquired is at the new Highlands development. It's a 331-unit apartment called the Aubrey, which both of us are very familiar with, over on Pierce Street. And those rents go for up to $8,000 a month, Shawn.
God.
The other building that they acquired, that they named, is in the Pentagon City area called Aura Pentagon City, a 534-unit apartment complex that they're going to be renaming Cortland Pentagon City. They're just going to blast that Cortland name on everything. And there are other 2 unnamed buildings totaling 1,500 residential units, coming in at about $1 billion. For those doing the math at home, that's about $666,000 per unit, Shawn. So
wow.
Some of these are larger, 2-bedroom and 3-bedroom units, but these are Class A apartments in essentially an upper tier market that has premium employers like an Amazon in Pentagon City, and like a Nestle, like a Microsoft in Roslyn, and an out-of-town institutional investor is placing a 3, 6, 7, 8, 9, 10 figure. 10 is 10 figures $1 billion. 3, 6,
10 figure
10 figure investments on the Arlington County market. Shawn, what are your thoughts?
I love that. I mean, that gives you confidence, right? Because I think what has happened, and there's so much talk about, will work ever go back to the same kind of feel again? And there's a lot of people saying I was talking to some clients the other day, like, oh yeah, I saw somebody on the metro with like a box and a plant, and they're going back into the office. So some people are starting to do that trek, and there's other people that are like, wait, the office work has changed completely, and we're never going to have to go back into the office. It just feels awkward. Why do we have to go back to an office when we can just do the same thing from home, meet via video? Both are good, valid points, and some people like to work on their own. Some people like to work in a work environment. But it gives you confidence in this area. And that's what I keep saying about know where you're purchasing and what you're purchasing, because the area here is kind of, what's the word? Secured, right? It's secured by the government and all of these big companies that are coming into the area. And so what does that do? It gives confidence to not only other companies to come in, but other companies that will provide housing like Cortland just did, right? And for them to spend $1 billion, that's $250 million per building on average, $666,000 per unit. Now, some of these are extravagant, really nice big units. Over in the building here, I can't remember that. What would you say the name of it was?
The Aubrey.
The Aubrey. Was that built by the same builder, do you know?
Penzance,
right?
Yeah.
So, I mean, I haven't been in that particular rental building. Have you been in the rental side of it?
Yeah, it's nice.
They're sweet, right?
Yeah.
I mean, and that's the thing is, a lot of these buildings, if you go into them, in our area, there's a lot of condos and a lot of apartment buildings, and the trend has been building and building and building. They're not building condos as much; they're building apartment buildings, and those apartment buildings are super nice, super luxury. Have every amenity, anything that these people want. And so what that does is it inflates these rents. And if you look at an apartment rental, just like a 1-bedroom, I mean, they could be in the $3,000 range, more than that even, right? And you go back to the condo market and that same unit, granted it's an older building, but same size, maybe $2,200. So they're commanding at least $1,000 more for the same product, but they've got, such a nicer building. And so that's why it's so hard for when renters come from those buildings and they're like going to buy a condo in the area. They're like, it's not quite there for me. It's because they are spoiled. They're living in these amazing places that were just built. But in the end, I love to see that investment. It gives confidence to us in this area and says, you know what, this is why we live here. This is why we invest here.
Well, if you love that investment, you're going to like what Mike Altman, Chief Investment Officer at Cortland, had to say. This is just the start of Cortland's investment in the region. Cortland said it plans to double its investment in the Northern Virginia region with the goal of becoming a top player in the market.
That's awesome. That is great.
I'm convinced that Arlington rents are underpriced until they hit like $1,000 a square foot, or I guess it's sales figures, but until Arlington condos are $1,000 a square foot, this is a premier market next to the world's most powerful city in the world, and an area that is commonly voted as the best place to live, one of the best places to work, some of the best parks in the entire nation, and some of the best schools in the entire nation. So it's no surprise that they command these prices. The only surprise is these prices are so good right now, and eventually they're going to hit that $1,000 a square foot mark.
Yeah, right now the average price per square foot in Arlington, I would say North Arlington, is somewhere between $550 and $700, kind of in that range. You get your higher end buildings are going to be more towards the $700 range, and those mid-range buildings are going to be towards the $550. But I think you're exactly right. I mean, the condo market was slowed down because of the pandemic. But I think that once people start realizing, all right, it's safe, and they realize what companies are coming here and investing in here and how much money is going into the area, that is just going to boost everybody's confidence to come back into the market. We're going to have a lot more investors coming in here. So just because the market is slow in some areas, it will slow here. It will come roaring back again in different ways.
Absolutely. All right, with that being said, let's move on to our third topic. This topic comes to us from a variety of different sources. This is, I kind of got football fever after the draft, and now things are starting to shake out. And, sports talk radio is always so spicy in the offseason. They got to come up with all these topics. So coming to us from the richest Architectural Digest, New York Post, Tom Brady and Gisele Bundchen's real estate portfolio. Pretty impressive when we start taking a look at what Tom Brady has done. Just going through the list, Tom Brady started, obviously, by purchasing in Boston, in the Back Bay community of Boston. Purchased a condo for $4.125 million in 2004. Imagine a $4 million condo in 2004. Wow. I mean, 2004, it did have some high prices before things cooled off a little bit after that. But the pad had 3 beds, 3.5 bathrooms, and it can be rented for how much per month?
Oh, geez, $12,000.
$35,000, almost. So he sold that property in 2012 for $9.27 million. So bought for $4. Sold for $9. This is going to be a common theme
of
Tom Brady winning off the field. The second house that's mentioned is a home in Brentwood that Brady and Bundchen purchased for $11.75 million. They even put in a pool that looks like a natural lake in the backyard. I mean, just look at that photo. That's a sweet looking house.
Wow.
And they sold that to Dr. Dre in 2014 for $40 million. Imagine if Dr. Dre is your demographic. Like, if your potential buyer list includes Dr. Dre, that's like a pretty good demo. And that's not unheard of for Tom Brady and Gisele, because they flipped a lot of properties and a lot of celebrity clientele have purchased them.
Yeah.
Next up is Brookline Boston Mansion. So this mansion, $37 million. They purchased it for $4.5 million, 5-acre estate, and they eventually sold the property Christmas Eve 2020 for $32 million. So
crazy,
purchased
man.
the property. They used the same designer that designed their Brentwood house and then sold it for $32 million. So putting a lot into it, getting a lot out of it.
Yeah.
But Tom Brady also has a lot of love for Manhattan. Let's see. He had a Flatiron luxury condo in Manhattan, 360-degree view of the Big Apple. That was in, let's see, 2016. I mean, this is just like an impressive list. Like, he's almost at the level of like Ellen DeGeneres, who just like buys, a $20 million property every year and then sells it for like $30 million.
Yeah. How much was the New York one? Does it say?
The couple listed the estate for $17.25 million, and then in 2016, and eventually sold it for a little bit less, for $14 million.
How much was that one? So Matt did this amazing video of this place in New York City. What was that one going
$25 million.
$25 million.
Matt
was slightly above Brady.
A little above Brady. Kind of channel my Eli Manning.
Yeah, that's right. That's right.
A little bit. All right. Speaking of New York City, another one, Tribeca apartment, $20 million. They purchased it for $25.5 million in Tribeca, and then they sold the property for $40 million in 2020.
It's just insane. It's insane. And you think about how much they make, right? And it doesn't even matter at this point. I didn't realize. You would think that Tom Brady, the number one quarterback for years, has to be worth so much, and then Gisele blows him away.
Right.
I was like, no way.
Yeah.
A model is just crushing him on income. But did you hear that he signed? I think he signed with Fox Sports.
Yeah.
For like $334 million for that, and now that's postponed because he's going to be playing again. But he's already signed a deal. So
is that more than how much he made as a player?
It's got to be, right?
Yeah.
Yeah.
The TV deals are just absurd.
It's so crazy.
So the next one, which caught my eye, was Yellowstone Club in Montana. Get a load of this. This community, 864 members. The initiation fee for this private club, $400,000 just to be a part of the community. The average member spends about 60 days per year, about 2 months at the property. Houses go anywhere from $5 to $25 million. Let's see, they bought a property in 2017. Doesn't say the price, but the photos of Big Sky Country are out of this world.
Yeah, I've never been out there. Have you?
I got to get out there.
I do too.
And then he made his way down to Tampa Bay, and this was widely publicized, rented Derek Jeter's $29 million Tampa Bay mansion equipped with 8 bedrooms, 8.5 bathrooms, and an 80-foot saltwater lap pool. Absolutely incredible. In 2021, Jeter put the house up for sale for $29 million, eventually selling the property for $22.5 million. And finally, speaking of Florida, the most recent purchase is Tom Brady and Gisele purchasing a $17 million plot of land on Miami's Indian Creek Island, also known as the Billionaire's Bunker. Shawn, that piece of dirt right there, wow. $17 million, and it's also pretty close to their boys, Jared Kushner and Ivanka Trump. I think they're friends, or they know each other, and so that is the type of clientele that you can expect on Indian Creek Island.
That's amazing. So like that lot right there that it's showing, there was a house there at some point, right? And so like, is it better just to sell the lot without the house? What do you know?
Not every lot is built out on the island.
Yeah.
If I could pull up the island real quick, it's really, really neat. It's across the little channel from was it where did that condo collapse?
Oh yeah.
Sunrise, Sunset, Surfside. So it's across the little, I guess, creek from Surfside. So there we have it right there. If I pull up the satellite view, you can see like there's not every single lot is built out. So there are a few.
Oh yeah, there's a lot.
There are a few empty lots. So it's not like maybe they are tearing down a house, but these houses aren't built to be torn down.
I got to be honest, I didn't realize there was a golf course on that. That's pretty sick.
Yeah, they don't want you to realize there's a golf course. With our handicap, I don't think they'd let us anywhere near that course.
Yeah.
Me and Shawn are sending balls into Kushner's backyard and into Brady's windows.
Off the roof.
Yeah, I don't think our insurance would cover the deductible for breaking Tom Brady's window. Where does it end? Like where's it end from? Where's the next property? All of these are in the United States. Why are there no Brazilian penthouses? Do you think they own a Brazilian penthouse, or maybe they just prefer to rent when they go down to Gisele's hometown?
Yeah, I don't know. It'd be so fun to have that kind of money and just go to the best places in the world and just say, I want to buy that, And you know, once he holds it, it's going to go up in value. I mean,
you said earlier it doesn't matter at these prices, but like I think it does matter. I think for this type of competitor, I think every little bit matters. I think he's trying to win at everything that he does.
Yeah. Well, that's the thing is he's so competitive. He's a different kind of person, and it's like, no, I will win every single time. Not everybody's built like that.
Yeah, he's trying to win every single time, except for against the Washington football team last year, which beat Tampa Bay. Big upset. I mean, they couldn't beat him in the playoffs, but they did beat him in the regular season. So very very cool to look at his portfolio. If you see drool coming out of my mouth, that's me looking at all these penthouses and Florida, soon to be mansions that are located on golf courses. Basically goals right there.
I love it.
But until I can win enough Super Bowls to have rings on both of my hands, I'll
You'll be in this condo, right?
Yeah, I'll be in this condo. All right, guys. Well, there you have it. Another episode of the Shawn and Matt Show. Thank you so much for watching. Until next time, we'll see you then.
Take care.